Just give me a moment. Very good morning to the members of Andheri West Study Circle and our learned speakers of the day. Before we start our session, I'll just request all the members to stand up for the ICI notice.
And him.
I'll request participants to be on mute when they log in so that it just maintains the quorum of the session. A very good morning to members of Andheri West Study Circle, core committee members, and our learned speaker, CA Dilip Phadke and CA Kunal.
Follower.
It's my pleasure to invite everyone today morning on a wonderful session which is lined up for today. We are going to, in the next 2 hours, we're going to discuss what are the recent changes under the GST law and the new system regarding the new compliance system, which is QRMP. The important the nuances of that particular scheme will also be discussed. Before we start the session, it's my honor to introduce our speaker of the day, CA Dilip Phadke. He's a chartered accountant and a law graduate in 1976. He's a practicing CA since 1976, and he practices primarily in the field of indirect taxes, such as GST, erstwhile MVAT, income tax, and he's also engaged in project finance and audits. He is co-author of commentary of the Maharashtra Value Added Tax Act 2002, published by Maharashtra Sales Tax VAT News. He is chief editor of Maharashtra Sales Tax VAT News, which is a weekly publication. He is co-author of books for FYBCom, SYBCom on accountancy, and management accountant for TYBCom. He is a regular author and has written many articles for Chambers Journal for Chambers Tax Consultants Journal. He also writes monthly article tidbits on LBT VAT in Sales Tax Review, which are published by Sales Tax Practitioners Association. To be honest, Dilip sir has been very active in the field of knowledge. I've in my tenure of last 2 years, I've seen many speakers, but I still remember the session we had with Dilip sir in our mayor's hall. Although the session was on particular topic on GST, but the end of the session, it was more like students asking the questions to their professor, and Dilip sir was kind enough to answer all the questions. So I really remember that session very closely as yet. So with this, let's welcome Dilip sir with a big round of applause. I also have the pleasure of introducing our second speaker of the day, CA Kunal Salvi. Kunal is a ranker in his college academic days, and he's done his graduation from Lala Lajpat Rai College. He cleared his chartered accountancy in 2007 and has been a fellow chartered accountant since 2012. He's associated with Dilip sir since last 18 years. He is a partner in SKY GDP and Associates, the founder member of which firm, which is Dilip sir. Kunal is practicing CA and he practices in the field of VAT, GST, income tax, project finance, assessments, audits, and various other fields. He is also a speaker and a resource person at various study circle meetings, conferences, and workshops. He is visiting faculty on direct and indirect tax subject at KES Shroff College, Kanpur. It's our pleasure to have such a young and dynamic speaker in our study circle today. So with this, let's also give a big round of applause to Kunal. And without wasting any time further, I'll request Dilip sir to take over from here and discuss the recent changes on the GST. Thereafter, Kunal will take his session, and towards the end, we'll have a time slot for question and answers. So over to you, Dilip sir. So you'll have to just change it to the PPT mode.
PPT mode. 1 minute, I'll go out and okay, that is not a problem. So good morning, everybody. Now nearly there are 22 participants which I can see. The Andheri Study Circle has organized this particular webinar for the purpose of making members know the changes which are effective from 1st of January 2021. So there are many changes which are done in the GST Act and rules, which we are going to discuss. Now, what are the things and why it was necessary for government to make the changes that we are going to see first? Now, we all know we all lost nearly 1 year for development and for coming out to the comfort zone because of the COVID. This particular 2020 is lost by us, but definitely the chartered accountants were working and filing the returns, audit reports, and doing many things. Government was busy in making the changes. So chartered accountants, when they are busy in doing the work from remote control and out of office without staff, there was less time for going through the amendments which are taken place. Now, there are many changes which are made by the government in the portal, like e-invoicing, introducing QRMP, GSTR TB2B, then QRMP. Out of these, two will be taken up by Kunal after I complete. That is e-invoicing and quarterly return monthly payment scheme. So let us see why all the changes which are taking place are happening. Now, department, and we also know, we read it in the paper, that there are lots of GST fraud cases which involve use of fake invoices. Now, use of fake invoices means issuing invoices without actual delivery so that the opposite party gets the credit, claiming excess ITC than what is eligible, what is there in the books, circular trading, that is goods don't move, but bills are transferred from one person to another person to increase the invoice value or the stock value. Bogus registrations. There are fly-by-night operators who take the registrations and disappear all of a sudden. There are many people who are not exporting what they are showing and claiming the refunds. Government is unearthing all these cases now. So because of this, CBIC made many changes, because of which the means of the fraudsters will be controlled. Now, as it is, we know there are more than 400 people who are arrested. The amount involved was more than 5 crore. The bail was not available to them. And out of that, nearly 10 to 15 are chartered accountants. So basically, when we see this particular background, the question arises, how government is going to control all this? So in this case, what we have to see is there are many changes in the rules and acts and sections which will be avoiding bogus registrations. They cannot stop it totally, but they can restrict it. Making or issuing fake invoices difficult. Stringent penalty and prosecution provisions. Bringing restrictions on availing of the ITC. Making grammatical corrections. And some of the mistakes which were left unattached. So government is doing all this by changing the law and rules. They have made some portal changes because of which filing the returns has become easy, which will have lesser mistakes. For example, they have started giving you ready 3B from the basis of GSTR 1 and 2A, which is there. Now they have started to block the filing of GSTR returns as well as filing of or preparing the EWA bills. Then bringing e-invoice, because of which the fake invoicing will be reduced. And bringing the new scheme, that is QRMP, quarterly returns monthly payment. Now, because of all this, what has happened? The main aim of GST was seamless flow of credit. Now, from this seamless flow of credit, we are reaching to the era of ITC मिला के देखो. यानी अगर आपको ITC मिल गया, तो you are lucky, but don't be under impression that you are lucky for a long time. They might find it out afterwards that ITC which you have taken was wrong. You have to reverse it and reverse it with the penalty and interest. So, मिला के देखो मिल गया फिर भी there is no guarantee that it will be available to you continuously. Now there are many hurdles which are there, which you have to cross if you want to avail the ITC. First is you have to see whether the conditions which are there in section 16, basically subsection 1 and 2, you have fulfilled or not. After that, you have to see whether you are eligible for taking the credit, because in section 17.5, there is a block credit. So whether you are falling in those blocking, that's what you have to see. Then you have to compare the ITC as per books with dynamic 2A and static 2B, reconcile them. Then you have to find out whether the vendor have made the payment and follow up whether he has filed up 3B. If you want the ITC, then they have amended Rule 36.4, which we are going to discuss in details. There is Rule 42 and 43, where you have to reverse the credits of input and input services, that is, credit available on these two, along with the capital goods under Rule 43, and that also, that reversal is with interest. We'll be seeing this in short because there are no changes in it. Rule 86A, where there is no difference or there is no amendment, is regarding ITC, which can be blocked by your proper officer. So you have to find out whether some of the ITC which is available to you is blocked by the proper officer. Now why and how he can do it, we'll be seeing it in short. 86B is a new rule which they have brought in which there is a restriction of taking the credit of ITC. Maximum you can take is 99%. So minimum 1% you have to pay for the purpose of filing your return. Now we are going to see this in details. And for doing all this, you will have to appoint minimum 2 to 3 staff to take up follow-up depending upon your size of the organization and size of your suppliers as well as your customers. So do you feel that it is a seamless credit? According to we know, you will have to go through a lot of hurdles, or you have to see that you get it. Now, if the ITC available is not much, then you may think of expensing it out, so that what will happen, your purchases will increase, because of which the profit will be reduced. If you don't take ITC on capital goods, the value on which you will get the depreciation will be increased. Ultimately, what will happen? The profit which is reduced because of this, you will have to pay 25 to 30% lesser income tax. So there will not be any interest, there will not be any penalty, and you can sleep nicely without bothering about when they will call you up for reversing the ITC. So basically, when we understand this, the points where there are no changes, I'll be discussing it in short so that there will be a continuity in the particular discussion. Section 16, which is the section which gives you right to take the credit. What are the subsections in that? First is that you are entitled for taking the credit as specified in section 49. Subsection 2 gives you the conditions which you have to fulfill. There are 4 conditions which are to be fulfilled. 1, you should be in possession of invoice. Second, you should be in receipt of the goods or services. Third, the payment of the tax should be done by the supplier. Now, how you do it, that is a basic problem. Then the supplier as well as you both will have to submit the returns. Otherwise, if you don't fulfill all these 4 conditions, you will not be entitled for the credit. Now, if there is a capital asset and you take ITC, you cannot claim the depreciation on the ITC which you have taken. Now, this particular section, subsection 4, there is a change. Now, this particular change is a favorable change. So, what is the change? Let us see. Subsection 4 reads that a registered person shall not be entitled to take input tax credit in respect of any invoice or debit notes for supply of goods or services or both after due date of furnishing of the return under section 39 for the month of September following the end of financial year to which such invoice. Now, after that, there was invoice relating to such invoice. Debit note, invoice relating to such. These particular words are omitted. So what is happening now? How it reads now? Financial year to which such invoice or debit note permits. So previously what was happening? Suppose I have got a bill of 1718, I made a payment late, because of which he charged me the interest, let us say in 1920. The date of invoice was 1718, he charged me the interest in 1920. Now, the due date of filing the annual return was over. 20th October of 18 was also over. So what was happening? Even if the debit note was raised in 1920, because it was related to the invoice date, I was not able to claim the credit of the ITC, tax which he had charged me on the interest. So this particular linking the debit note to the invoice date is done away with, and now you will be able to get the credit even if the debit note is given in respect of an invoice which is of a date for which the filing of return of September is already done. So that is basically the change which is favorable for the purpose of us. Now let us see what is the change in rule relating to the ITC. Now rule 59 and 60 is changed, as well as rule 36.4 is changed. Now we are going to see 36.4 in details. 59.8, which makes the provision for the purpose of giving you 2B, which is static, and you can take the credit of the figures which are appearing in 2B, because these are the figures which will appear in your 2B, provided the returns are filed by the monthly filer, quarterly filer, and the new scheme, that is quarterly returns monthly payment, where there is a facility for the purpose of giving the invoices, which is called as IFF, which will be discussed in detail afterwards. So these three credits will appear in your 2B that is given to you in Rule 59.8. Already we are accustomed with this, so I'm not going to go into the details about this particular 2B. Now let us go to the Rule 36.4, which restricts the credit. Now whether this particular restriction is constitutional or not, I'm not going to discuss anything, because if I start to discuss this, then there'll be a lot of time which will be required to explain whether it is constitutional or unconstitutional on all that. But according to me, this particular section, rule gives you a credit which is additionally, which can be availed by you. So for example, 2B is showing 1 lakh only, and your books are showing, let us say, 2 lakhs. Now, for the period October 19 to December 19, you were entitled to claim 20% more, but subject to the maximum of books. After that, that 20% was reduced to 10% between January 20 to 31st December 20. Now this particular 20%, 10% is further reduced to 5% from 1st January 2021. So as such, there is no difference between the provisions of section Rule 36.4. It is only reducing the percentage from 20 to 10%, 10% to 5%, and already we are doing it. So basically, I don't think it requires any further explanation or discussion. Now, Rule 42-43, as it is we know, I'm not going to discuss Rule 42-43, only important point which we have to remember that I'm going to discuss is Rule 42 is applicable when you have to reverse the ITC which is available to you in respect of inputs and input services. So how to reverse it, that is given to you in Rule 42. Rule 43 gives you the manner in which the ITC which you have taken on the capital goods is to be reversed. Now, this is applicable only when there are taxable and exempt goods or services supplied by you. But what is the problem? If you read Rule 43H, I'll read it word by word. The amount of ITC reversal along with the applicable interest. So you have to pay the interest on that amount which you reverse. Let us take a simple example. A transporter who is paying the taxes on the forward charge has taken the credit of the truck which he has purchased for giving the service in the month of January 19. Now, transportation charges are exempt, so 20 to 30% of their supplies become exempt. Now, what will happen? You will have to reduce the ITC. It comes to, let us say, 1 lakh rupees. Now, 1 lakh you will have to pay the interest from 1st January 19 when you took the credit. So you took the credit, let us say in February. So February 19 to the year or month in which you are filing the return, you will have to pay 18% interest. So this is a problem which is going to arise. Similarly, if you have availed more credits by manner in which you have reversed the ITC monthly and yearly calculations, if there is any difference, and the ITC taken by you total monthly is more than actually which is available to you, then in that case, again, you have to pay the interest. So this payment of interest really kills the taking of ITC, and especially when you have got a common credits, then you will have to definitely think about whether to take the credit or you are not to take the credit. If you do the calculations, whatever I told you in the beginning, that you might forgo the ITC and claim depreciation on that ITC many times. Now, Rule 86A, this is blocking of the credit by the commissioner or the proper officer authorized by him in 4 or 5 cases. First is the invoice issued by a non-existent person. So there is a doubt the person who is issuing the invoice is in existence or not, or he has taken the bogus registration. Without receipt of the goods, if you take the credit, the tax is not paid by the supplier to the government. Recipient does not exist now. How this happens, I don't know. Because when you take the ITC, you have to be existent. The tax invoice, you are not in possession of it. So in these 5 cases, the proper officer can block your credit. Let us go to the new rule, that is 86B. Now, as this is new rule, I am going to discuss it in details. Now, there are many writ petitions filed in the court against this particular rule. So again, I'll be speaking in short whether this particular rule is valid or not, etc. Let us wait for the purpose of court judgment, which will come. Now let us see the rule first. First, I'll read it word by word and then we will discuss what is the implication of it. Notwithstanding anything contained in these rules, so this is a non-obstinate clause saying that whatever is contained in other rules, you have to override. You are not to take it into consideration while you are applying this particular rule. The taxable person shall not use the amount available in electronic credit ledger to discharge his liability towards output tax in excess of 90% of such tax liability in case where the value of the taxable supply other than exempt supply and zero rated supply in a month exceeds 50 lakhs rupees. So broadly, let us first discuss it is applicable to whom. It is applicable to the person who is supplying the goods worth more than 50 lakhs rupees in a month. So if I am supplying 50 lakhs rupees goods regularly, my turnover will be more than 6 crores. So even I will not be able to go for QRMP scheme. Then in that case, 5 crores I am exceeding. So basically, I will not be called as a medium or small dealer from the viewpoint of taxes. So such limit, that is 50 lakhs rupees, will eliminate, let us say, 70% of the taxpayers. Then if you see, this particular 50 lakhs rupees is excluding exempt supply on which you are not to pay any tax, or zero rated supply where you are not to pay the tax. So in this case, further reduction of 20% or 10% can be done. So now how many remain? Hardly 80%, sorry, 20%. Or maybe 15%. Now again, out of these 15%, they are given 5 conditions where this restriction will not be applicable. The first is, if that particular person who is making that supply has paid for previous 2 years a tax more than 1 lakh rupees, then he will not be falling in this category. That is, this particular condition will not be applicable to him. Now suppose that person or a proprietor, so if that particular proprietor, Karta, managing director, members of the committee, if they have paid the taxes of 1 lakh rupees or more in previous 2 years, then also it will not be applicable. So according to me, further 10% are reduced because of this particular provision. Then second, if he has received the refund under section 54(3), so this is applicable to exporters. Already exporters we have deducted, so I will not take any deduction for this particular subclause. Third, if you have taken any refund for the purpose of inverted duty structure, so in that case what will happen? In that case, again, it will not be applicable to you. I don't think there will be more cases where this will be applicable, so I will not reduce anything. The registered person has discharged his liability towards output tax through the electronic cash ledger for an amount which is in excess of 1% of the total output tax liability, applied cumulatively up to the said month. So what happens? You have to take the total from April till you are filing the return and find out whether you are paying 1% cumulatively. So again, because of this, what will happen? If you have paid 1%, then it will not be applicable. So again, it will reduce further by another 2 to 3%. So how many remain? Subclause E is not taken into consideration by us totally. So let us forget about it. That is government, public sector, that let us not consider them. So hardly 2% of the total taxpayer will be coming into the ambit of this particular provision. Again, how much working capital will be blocked in this case? Suppose the total tax amount which you have to pay, let us say on 50 lakhs, the tax rate for easier calculation is, let us say, 10%. Then how much you have to pay? You have to pay 5 lakhs. Out of that 1%, remaining 99% you can use ITC. So only 1% of 5 lakhs will have to be paid by the dealer in cash. Now, according to me, that will not block much of the working capital. Now, remember one thing. This particular provision is brought in for the purpose of seeing that fly-by-night operators, that if they take the registration, issue the invoices, and afterwards they are not to be seen, they are vaporized. So in such cases, if they have to make the payment of 1% of the tax, and they have issued the bills only for the purpose of adjustments, they will not be able to do it. So this particular provision is brought from the viewpoint of controlling the wrong credits. Now, if you see whether it is, let us discuss in short, whether this particular provision is against Constitution. Now, AAP and Company already has filed a writ petition through Avinash Poddar, sir. So let us wait for that. What is my comment? I'll just say, if you read section 49(4) of CGST Act, it says that the amount available in the electronic credit ledger may be used. So you are subject to certain condition, that word is not there. May be used for making any payment. So you can use it for making any payment of the taxes. So the Act is giving you the permission to use the full amount of electronic credit ledger to pay the output tax liability. But because of this particular section, when it is giving freedom to the dealers to make the payments, this particular rule has gone beyond the powers which are conferred by the Act, and delegated legislation, that is the rules, has overtaken the statute or the law. So what will happen, whether government will change this particular section, we'll have to see after we get the judgment of the court. So I don't want to speak more on this, but remember one thing, this 1% which you have to calculate is excluding the amount which you pay for the purpose of RCM transactions. So while calculating cumulative 1%, whether you are paid or not, don't include in it 1%, don't include in it the amount which you have paid for the purpose of RCM transactions. Now there are certain changes which are made effective from 1st of January. They are not that important, but I will just discuss them. Now section 10, which is for the purpose of composition scheme, originally it was applicable only to the goods. Now it is made applicable to the services. Similarly, there is a permission given for the goods supplier to supply certain services up to certain percentage, and even the service people, that is professionals like us or service providers, can go for the composition. But what was there, a lacuna was there, that section 10, which was there for the composition scheme, was speaking only of the goods. Now this particular lacuna is corrected by the government by bringing in this particular change. Now what is the change? If you see, a registered person seeking to pay the tax under composition scheme shall not be engaged in making. So there are three sub clauses. So they should not make any supply of goods Previously, services was not there. So even services which is not leviable to tax, that is exempt services or exempt goods. B, the interstate outer supplies or even services shall not be made by him. Any supplies or even services you should not provide through electronic commerce operator, then only you will be allowed to opt for composition scheme. So this is a change which is brought in by the Act. Now, going further, this is just to remind you that if you have extended any loan or deposit on which as a consideration you receive interest, then that particular service you should not take into consideration while calculating the specified percentage. So that is second change in the section. So there was first change in the section in section 16. Now this is the second, section 10. Now let us go to the other changes. There is a change in section 29(1). Now previously what was there? If I take voluntary registration and afterwards I found out, let us say I took the voluntary registration because I was going to get some tender. Afterwards I found out that I am not getting the tender. It was not possible for me to cancel my registration. So what was happening? I had compulsory to continue with the registration. So now there is a change, allowing the person who has taken a voluntary registration to cancel his registration, provided he has not crossed the threshold which is prescribed, that is 20 or 40 lakhs, and there is a necessity of compulsory registration. He is falling under that section 24. So in this case, he can opt for cancelling the registration. So that is a good change which is brought in, that a voluntary dealer can cancel his number. If he finds out that he has not got the order, then he can cancel it and stop filing the cumbersome procedure of GST. Then section 30 into bracket subsection 1. Now this particular subsection is relating to the revocation of suspension application. So officer is given the authority to suspend your number, which you are going to see in detail afterwards. Now you have to make an application for revocation of suspension within 30 days. Now, because of certain reasons, you are unable to file your condonation of delay application, then you can approach commissioner to extend this particular time, and he has got authority to extend it for further 30 days. In dire necessities, you can even approach the commissioner and condone the delay for further 30 days. So totally, the condonation of delay can be for 60 days. So this particular provision is also good because this is giving a concession in case of good cases or good reasons. Tax invoice for the supply of services, subsection 2 of section 31. Now, in respect of the services, the provisions are governed by section 31. Now, in this subsection, they have taken the power to the government. What are the powers? With respect to the categories of the services or supplies in respect of which a tax invoice shall be issued. So government can make rules relating to this particular matter, that is the categories of services, where the tax invoice must be issued, the time limit within which it shall be issued. So the time limit which is there, they can either extend or reduce it. And the manner in which it shall be issued. So what are the contents which are to be given in the bill, etc. That can be mentioned or given by the government. That power is given to the government under this particular subsection. TDS certificate. Now previously, the procedural part was also there in section 51 regarding the TDS. That is, who can issue the TDS certificate? What are the consequences if the TDS certificate is not issued? All these were there in section 51 itself. So what they have done now? They have eliminated that from section 51 and they have said now it can be done in the rules, because what happens? To change the section, it is very difficult. But to change the rules, it is very easy. That's why that procedural part, they have shifted to the rules. Now schedule 2. Now schedule 2 is for what? Schedule 2 is for the purpose of classifying whether certain transactions are goods, supply of goods or supply of services. Which is the charging or finding out whether a particular transaction or a supply transaction is a supply or not. We refer to section 7. Now in that section 7, there is a subsection 7(1)(c), which mentions that the activities specified in schedule 1, even if they are done without consideration, shall be treated as a supply. So schedule 1 is a schedule which gives the transactions which should be treated as taxable even if there is no consideration which is necessary as per section 7. Now before amendment, para 4 of schedule 2, I'll read it word by word and I'll read what is there after the amendment. So it reads that transfer or disposal of the goods forming part of the asset of the business shall be considered as a supply of goods. Up to here, it is okay. But it was continuing. Even if such transfer or disposal is for a consideration or not. So what is happening now? Whatever is to be stated in schedule 1, they are stating it over here. So schedule 2 is becoming schedule 1 or overtaking schedule 1. So what they have done? They have removed that part and they have stopped it at supply of the goods. So even if such disposal or a consideration is for consideration, that particular part is removed. Where the goods held for the purpose of business are put to any private use, let us say my business laptop, I take it to home for personal use. Now, whether I have made a bill or not is not known. Then whether it should be treated as a service, it is said that it is a supply of service. So up to here it is falling in schedule 2. But after that what it says, if it is without consideration, even if it is without consideration. So after amendment, that lacuna, that is taking over schedule 1, is now avoided. So they have removed that particular word, if it is without consideration. So this anomaly is removed by this particular change. Now here you will see that this particular part or this particular part is removed. So already I have discussed with you that why it is removed and what is done. So I'm not going to take more time because already it is 11:30 and still I'm on slide 14 now. I have to complete 24 slides, and after that Kunal is going to speak with you regarding QRMP. So I don't want to take his time because he's going to discuss with you the important provisions which we have to deal with daily. And tomorrow is the last date. 31st January is the last date where you have to decide whether you are going to continue in QRMP scheme or not. If you want to opt out, because by default, they have put all the eligible persons under QRMP scheme. So if you don't want to go for QRMP scheme, today or tomorrow you have to opt out and see that QRMP scheme will not be applicable to you. So please remember it and act it after you listen to my colleague Kunal. Now let's go to the beneficiary of fake invoices. Now what is that beneficiary? Now if you read the papers, you come to know that registration was taken in the name of the maid servant, driver of the person. They were issuing the bills. They were not having a salary of even 10,000 and they were issuing the credits of running into lakhs of rupees. So there was a person who was doing all this through certain persons. And there was no provision to bring that particular kingpin into the nets of the GST because he was not doing anything directly. So this particular amendments are brought by new subsection 1A by saying that 1A is introduced wherein it is provided that a person who retains the benefit of the following transactions, supply any goods or services or both without the issue of invoice or issues an incorrect or false invoice with regard to such supply, issues any invoice or bill without supply of the goods or services or both in violation of the provisions of this Act, takes or utilizes the ITC without actual receipt of the goods or services, takes or distributes ITC in contravention of section 20, that is ISD. So in these four cases, if a person other than who has done this retains it, then in that case, that person also can be taken to the task. So what it says, and at whose instance such transactions are conducted shall also be liable to the penalty of an amount equivalent to the tax evaded. So they have increased the penalty also. That whatever is the tax evaded or whatever is the ITC wrongly taken, that full amount can be recovered from the person who is benefited by this or at whose instance such transaction is conducted by the person who is registered. So basically, this is for catching the persons who are promoting such things. Chartered accountants are also taken care of by this particular penalty provision under section 132. Now what is that? Parallel to the provisions of 122, they have made this change. A person who even causes to commit and retain the benefit of the given offences would be liable to prosecution When prosecution can be done, if the amount which is involved is more than 5 crores. Now remember one thing, small and medium chartered accountants even take writing of the books or preparing the accounts on tally. Now whether they can be caught under this particular penalty section, that is, read the thing, it is who causes, even causes to commit. He may not retain the benefit, but he can cause to commit this particular type of offenses which we have discussed in the previous slide. So let us go to the changes which are there in the rules. Now this is regarding the registration procedure. It is giving additional time to the person, officer who is giving the registrations. Now previously, the time for giving the registration was 3 days. If within 3 days, officer neither gives you the registration nor rejects the registration, it was deemed that this particular registration is granted to you. Now they have changed the procedure for registration. Now you have to undergo other authentication by biometrics, then physical verification of certain documents. So basically, the time required is more. So not verified.
Dilip sir, unfortunately the share screen has stopped, so you'll have to just share your screen once again.
Okay. Give me the, okay, share screen. Now,
Yes, we can see the screen now. Perfect.
okay.
Yeah.
Particular topic. So whether I'll be able to continue it, because if he starts by about 11:50 or 11:55, then he'll be able to complete it by about 12 o'clock. Will that be okay?
Yeah, I think that is fine. It's okay, sir. Given that there are a lot of updates, you can take time till 12, and we can extend the session from 12:30 to 1 p.m. That's not an issue.
No. We'll try to see that because we started about 10:40.
Yeah.
So let us see
Yes.
how much more time I take. 15-20 minutes more will be required.
That's okay, sir. It's fine.
Okay.
Yeah.
1 minute. Now, wherever there is a necessity of finding out that particular premises belong to that person, what are the documents of that particular premises available, the visit of the officer is necessary to such a place. Now, in that case, 7 days will not be sufficient. So, what will happen? Then the time limit will be increased to 30 days. Now, if whatever documents which are submitted by the person is, I think there is some person dealing with this, so let it be. So basically what is happening, if any further documents are required, clarification is required, then in that case, he has to give a notice in REG 03. And in that case, that time will be increased to 30 working days if verification and all those things are required. Now, this particular change is necessary because if they want to see that unscrupulous people get registration, it is good move that you will get the registration only after you are verified by the proper officer. Now, what will happen? What is the benefit to others? If I am dealing with such a person, now I will be able to take a stand that the person to whom registration is given is after verification by that particular proper officer. So, along with me, if at all you want to see that I am penalized, the person who has given the registration also should be taken to the task. So that's why this particular change is a good change, and they have specified what is the procedure to be followed by that proper officer, then how he has to visit, what details he has to write down and all that. So that can be seen afterwards. Amendment to the registration. So over here, this is a new provision regarding suspension. Now, suspension precedes cancellation of the GST number. So if I want to cancel the number, suppose I am the proper officer, I want to cancel the number of a particular person. Now, when proper officer can cancel the number, there are circumstances. If the dealer has availed the ITC in violation of provision of 16, we already seen what are the conditions which are to be fulfilled under section 16 or rules made thereunder, furnishes the details of the outward supplies in GSTR1. So whatever you have given in GSTR1 is more than whatever you have given in GSTR3B. So in GSTR1 you have mentioned 1,50,000, and in GSTR3B you have mentioned only 1 lakh. So whatever amount you have shown in 3B is less than whatever you have mentioned in GSTR1. Then your number can be cancelled. Violate the provision of 86B. We have already seen what is 86B. That is payment of 1%. Now similarly, this action can be taken for the purpose of not following certain rules. Now what are they? ITC you have taken more than 5% now, 10% or 20% previously, as per rule 36(4). Then also it can be done. Then declare the outward supplies in GSTR1 for 1 or more periods in excess of the whatever amount you are declared in GSTR3B. He fails to pay the tax at the rate of 1% by cash as per rule 86B. So all these reasons, proper officer can cancel the registration. But that particular harsh action is not taken directly. before that they suspend your number. Now this suspension can be done by the proper officer without any intimation. That is, he will suspend your number and they will intimate to you that your number is suspended. And after your number is suspended, you will be given opportunity to defend your case, that you are not falling into these categories. You will have to defend yourself. And that defense can be taken by you only after suspension. So that is given to you in Rule 21 and 21A. Then after that, if your number is suspended, what happens? You will not be able to make any taxable supplies. So definitely you will not be entitled to upload your GSTR1. Similarly, you cannot take out any e-way bills. So you cannot dispatch any material. If there is any refund due to you, then you may not be granted the refund. So basically, there are a lot of disadvantages. And by mistake, genuine mistake, if at all your number is suspended, you can prove it easily that this particular mistake was not with the intention of defrauding the revenue. So suspension first, then your show, that is whether this particular suspension is right or wrong, you have to prove. If he feels that particular suspension was wrong, then he will cancel that suspension. If he feels, even after whatever grounds you have given in your case, if he feels that it is a fit case for cancellation of number, he will continue for the cancellation of the number. So this particular method or procedure is to be followed by the proper officer for the purpose of cancellation. Now there is a clarification issued by the CBIC which states that where there is a clerical error in filing the return, GST network will not be cancelled. That is, your GST number will not be cancelled. Only in fraudulent cases where there are significant discrepancies based on the data analytics and sound risk parameters and not mere clerical errors, the action of suspension and cancellation will be taken up. So when they are going to take it up, but again remember, this is only clarification by way of a press note. This is not there in law or rules. So basically, while filing your returns, be careful. Don't commit any mistakes. If you commit the mistakes, then there can be a problem which can take place of suspension and cancellation of your number. The suspension, GSTR1, when your GSTR1 can be suspended, that is, you are not allowed to submit your GSTR1. It is given in Rule 59. They are given 3 conditions when your GSTR1 can be suspended. That is, you will not be permitted to upload GSTR1. Now, if you are not allowed to upload GSTR1, what is the consequence? Your recipient or your customer will not get the credit. So they will not make a dealing with you. So be careful that this particular provision, that suspension of filing of GSTR1 should take place. Now, when it can be implemented by the officer? So there are 3 cases. Dealer has not furnished any return in Form 3B for the preceding 2 months if you are a monthly filer. So you are a monthly filer and you don't, let us say, month of November and December, I have not filed GSTR 3B. I will not be allowed to upload GSTR 1 of January. So in that case, I will not be permitted. Sorry, I will not be permitted to upload GSTR 1 of February. So that is the first case, monthly filers, 2 defaults. Now it is not continuous. He has not furnished return in form 3B for preceding 2 months. He has not furnished return in form 3B for preceding tax period, that is 1 quarter if you are a quarterly filer. And because of that particular new method, 86B, now what they say, if 86B is the case, he will be a monthly filer, he should get 2 months time. But over there, they say that if 86B is applicable and he is a monthly filer, then default of filing 13B only will disentangle him from uploading GSTR 1. So this is regarding suspension of GSTR 1. So let us go to the e-way bill. E-way bill, when it can be suspended and what is the time limit. Now previously, e-way bill was valid for 200 kilometers per day. Sorry, 100 kilometers per day. Now what they have done, this limit of 100, they have increased it to 200. So what has happened? Travel time is reduced by 50%. Do you feel that travel conditions are improved 100%, because of which 100 kilometers per day is increased to 200 kilometers? But not going into the details of that. Now, per day you have to cover 200 kilometers. And because of this, what will happen? Suppose I have to give a delivery to a place which is 650 kilometers away. I have uploaded e-way bill on 1st of January 21. Now previously I was getting 100 kilometers per day plus 1 additional day for the 50 kilometers, which is part of 100. So I was getting 7 days. So if I have uploaded e-way bill on 1st of January, my e-way bill was valid up to 8th of January. Now what will happen? It will be over by 5th of January, because now I will get only 3 days plus 4th day for the purpose of that partial. So now what will happen? Now my e-way bill will expire on 5th of January. Now I will be able to extend that particular e-way bill by following a proper procedure. But as you know, those who are dealing in e-way bill, they know that how difficult it is, because the time within which you have to validate that particular e-way bill is in the midnight. So that particular problem is going to be there. Now, there are further 3 slides. I'll take this in details, and the last 2 slides I will wind up very fast, because that particular provision is made applicable, that facility is available, that we'll discuss. Now, what is the additional reason because of which the e-way bill, just excuse me. My e-way bill can be suspended or blocked. There are 3 reasons. My registration is suspended under 21A. 1. Now they have added these 3 So already there are 3 reasons when your e-way bill can be blocked. These are additional 3 which they are introduced. So 21A subsection 1, 21A subsection 2, and rule 21, not subsection, subrule, 21A subrule 2A. So in these 3 cases, they can block your e-way bill. Already we have seen these rules, so I am not going into the details of that. There is a change in the wording of rule 138E. What is the wording? I'll read it out. It is important to know that no person shall be allowed to furnish e-way bill in case such person has not furnished the returns for consecutive period of 2 months. So previously it was consecutive period of 2 months. Now what they have done? They have changed the amended, changed the provision, and now what it says? Restrict generation of e-way bill in case returns have not been furnished for 2 tax periods. So previously it was 2 consecutive tax periods. Now what it is? Now it is 2 tax periods. So let us say it is I have done that particular mistake in, let us say, May 20, and second time I have done it in December 20. Previously it was not possible. Now, because of the change of the wording, it will be possible. Now, why this is done? This is for the purpose of the new method or new procedure which they have introduced. Now, last 2 slides I'll be taking up because it seems that there are certain questions. So let us see what these 2 slides are. Now, even if this particular navigation is permitted, that is communication between recipient and supplier. Suppose I am the recipient and supplier has not uploaded GSTR1, or in the GSTR1 he has not shown my bill. I can communicate with the supplier directly through portal. This particular facility is given by the portal now. That is communication between the taxpayers. Now, how to do it? I have given you the particular way in which you have to do it. Now, suppose I am a supplier, I want to communicate with the recipient. That is also possible. Supplier can communicate with the recipient directly on the portal. And there will be a evidence created about this communication also. Now, whether that particular recipient will be able to upload the invoice which is not uploaded by the supplier on the portal in GSTR1, because this particular facility is not effective, I will not be able to comment about it just now, but it should be possible afterwards. So how to do it? You have to navigate, you have to go to the services on the portal, user services, communication between the taxpayer, and after going to the communication with the taxpayer, you have to compose your complaint. So this particular method you have to follow for the purpose of doing the communication. Now there are certain other features also which are made available. That is, nil filers can upload the return by SMS, getting ready-made 3B readily. So you have to just check it and upload it. All these changes they are bringing in for the purpose of benefit of the taxpayers and the dealers, so that after some time, the dealer should be able to do all this work by themselves. So compliance work will be possible by the dealer directly. So that is their aim in doing this. So you can make a mistake because you're a human being. If you fail and you are having a strong mind, it makes you stronger, and you see that you don't make that mistake again, you don't fail next time. Hope keeps you going on, and love keeps you alive. So after that, there is a disclaimer, and ultimately, I thank all the participants who are there, and I have not seen any change in the participants, so they are continuously with me. Now, basically, I thank Devan and I think, who is the deputy convener, and the members of the Andheri Study Circle for the purpose of giving me a chance to discuss with you. Now let me see. Devang, are there any
Yes, sir. There are actually questions in the chat box, but what I suggest is,
let us complete the this thing first, and then let us take the. Then we'll sit side by side and we'll answer the questions directly.
That's right, sir.
So that will be better.
Yes, sir. I think that's right. So I'll request Kunal to take over from here.
Okay.
So if you can just stop screen share
Yes.
yeah.
My screen share is over.
So if you can just stop your screen share option. Dilip, I'm talking to you. Yeah. Okay. Okay. Kunal, if you can maybe just test the screen share now. I've changed the settings again.
Is it?
No, not yet.
Just wait. Huh?
Yeah.
I think now this done. Can I start?
One second. I can't see your screen as yet. Okay. Yes. Perfect. Thank you. You can start. Yeah.
Good evening, good afternoon, friends. See, my topic is new scheme of return, that is QRMP, new provision or new scheme introduced by the government or GST portal, that is quarterly returns and monthly payments. For that, we simply called it as QRMP. Basically, they have brought it because of ease of doing business and providing relief to the small taxpayer having turnover up to 5 crore. We all know the provisions of Section 37, Section 38, and Section 39. Earlier, we used to file GSR 1 with the by the provision of Section 37 and the Rule 59. Then details of outward supply in GSR 2. That GSR 2 is not yet made applicable, but it applies, which get auto-populated in the form of GSR 2A and 2B. That is Section 38 read with Section 59 and 60. Then Section 39, we are used to file GSR 3B on monthly basis. So GSR 3 earlier when they brought into effect, GST law, there was a concept of filing of GSTR 1, then GSTR 2 and GSTR 3, thereby automatically matching of whatever outward supply uploaded by the supplier, and the recipient will get ITC on the basis of the outward supply uploaded by the supplier. So that concept has not yet been materialized. So they have shifted from GSR 1 to 3 to GSR 1 and GSR 3B. And again from GSR 1, GSR 3B, there was proposed RET 1, RET 2, and that Sahaj Sugam form. Again, Annexure 1 and Annexure 2. Again, scrapping that proposal, they have come with the new scheme, that is QRMP, quarterly returns and monthly payments. So the basic funda for this bringing this scheme is for ease of doing business, relief to the small taxpayer, and the advantage of this QRMP is what? Now you will have to file only 4 GSTR 1 and 4 GSTR 3, that is quarterly returns. Earlier we used to file 16 returns, that is monthly 3B for 12 months and quarterly GSTR 1 for 4 quarters. So totaling 16 returns we are filing up to now. This is the big relief for the taxpayer who have been filing monthly returns, and the new rule, that is section rule 36 sub rule 4, restricting your ITC up to only 105%, that is 105%. So now there is a relief that you can make the payment for your GST returns on quarterly basis. Then again, there is a facility of IFF, that is invoice facility. Section 39, subsection 1, subsection 2, subsection 4, and subsection 7 got amended by Finance Act number 2 of 2019, but the date of effect of that amendment was not yet notified, which was notified by notification number 81 and section of 10th November 2020. Then rule 59, 60, 61, 61A and 62 are amended by notification number 82, and the QRMP scheme was brought with the notification number 84, and with the notification number 85 they have notified the special procedure for making the payment of the tax liability in case of first 2 months of the quarter, and circular 143, which explains the scheme in simple language. So what is the existing system till the date? We are filing monthly return, that is GSTR 3B, and making the payment also on monthly basis with the filing of GSTR 3B. Then we are filing monthly GSTR 1 for the taxpayer having aggregate turnover more than 1.5 CR, and quarterly GSTR 1 for the taxpayer having aggregate turnover up to 1.5 CR. So till now, that is up to 31st December 2020, the existing system of filing GSTR 3B monthly GSTR 1 for 1.5% turnover, 1.5 CR turnover, and quarterly GSTR 1 for the taxpayer having aggregate turnover up to 1 CR. This scheme has been changed to the new system, that is quarterly return and monthly payment. There is an option for the quarterly GSTR 1 filing and GSTR 3B for the taxpayer having aggregate turnover up to 5 CR. So the taxable person or the registered person whose aggregate turnover during the preceding financial year is up to 5 CR, that is 5 crore, can opt for the new scheme, that is quarterly returns. Compulsory monthly filing of GSTR 1 and 3B for all taxpayer having aggregate turnover more than 5 CR. So this scheme is not applicable for the taxable person whose aggregate turnover is more than 5 crore during the last preceding financial year or even during the current financial year. Monthly tax payment for all taxpayers. So whether you are opting for the QRMP or you are opting for the you are not there in the QRMP, you have to make the payment on monthly basis only. How to make the payment? There is a special procedure for making the payment when you are opting for the QRMP. who is eligible for the QRMP? The taxpayer having aggregate turnover up to 5 CR in the preceding financial year is eligible to opt for the QRMP scheme. Second, the scheme is not applicable to those who are not required to file GSTR 3B and 1. So those who are filing GSTR 4, GSTR 6, GSTR 7, they are not. This scheme is not applicable to them. This scheme is applicable only for who is filing GSTR 3B and GSTR 1. Further, this scheme is optional and is not mandatory. One can continue to file monthly returns as he is filing up to December 2020. There is a choice for the taxpayer whether he wants to opt for this scheme or not. And any person obtaining new registration or opting out for the composition scheme can also opt for this scheme. So any person taking new registration in the GST era can opt for this quarterly QRMP scheme. And even the person who is paying tax under composition scheme, that is under section 10, can also opt out from that scheme and come into this QRMP scheme. Now with the eligibility, there is some condition. If applying for QRMP scheme, there are two conditions. That conditions are returns for the preceding months as on the date of exercising the option has been furnished. Suppose I want to opt for the composition scheme or this QRMP scheme from the January 2021. So my returns for the December 2020 up to December 2020 should be updated. And once the option is exercised, it will continue to remain until it change or the taxpayer becomes ineligible. So meaning that once we have opted for the QRMP scheme, it will continue until the dealer by suo motu opt out for the scheme or his turnover for that current financial year exceeds that minimum 5 CR or 5 crore. The aggregate turnover, the counting of the aggregate turnover is on the basis of PAN. The aggregate turnover PAN wise of the preceding financial year to be considered while calculating the threshold limit of 5 CR. So whether I can opt GST wise QRPM scheme or not, or PAN wise. So the circular 143 para 4.7 of circular 143 says option to avail QRMP scheme is on GST1 wise. So for example, I am having 3 branches in Gujarat, Maharashtra and Karnataka, and all the 3 branches have turnover of rupees 2 CR, 2 CR and 1 CR or 1 CR, 1 CR, 1 CR. My PAN wise aggregate turnover for these all branches aggregating is 3 crore. So I am eligible for QRMP scheme because my turnover for PAN wise aggregate turnover is less than 5 crore. So I can opt for the QRMP scheme. Again, further for GST wise, I can opt for the QRMP scheme. Suppose I want to opt QRMP scheme for only Maharashtra GST, I can opt QRMP scheme only for Maharashtra GST, and for Gujarat and Karnataka, I can continue with the old scheme. In the case of aggregate turnover exceeds 5 CR during any quarter in the current financial year, the registered person shall not be eligible for the scheme from the next quarter. Suppose I have opted for the QRMP scheme because my turnover during the last financial year was less than 5 CR. Now I am during the year my turnover during the financial year 21-22 my turnover exceeds 5 CRs. So I automatically gets out of this QRMP scheme from the next quarter. Suppose my turnover for the April to June 2020 in first quarter only crosses the 5 CR. Then from the second quarter onwards, I am out of this QRMP scheme. So I have to file from second quarter onward on monthly basis. The example, suppose during the financial year 2019-20, my aggregate turnover was 2.5 CR. So my turnover is below 5 CR. I am eligible for QRMP scheme. And suppose for April 2020 to December 2020, my turnover, aggregate turnover for that GST or that PAN wise was 5.1 CR. So I am not eligible for opting QRMP scheme from the January 2021. Though my aggregate turnover for the preceding financial year, that is 2019-20, was below the 5 CR, but during the current financial year, my turnover up to December 2020 was crossing 5 CR. That is the minimum criteria. So para 20 of notification number 84 says a registered person whose aggregate turnover crosses 5 crores during a quarter in a financial year shall not be eligible for furnishing of returns on a quarterly basis for the first month of the succeeding quarter. So once my turnover, aggregate turnover crosses the 5 CR, from the next quarter onwards, I am not eligible for the QRMP scheme. The same view is also held in para 3 of circular number 143, which says in case of the aggregate turnover exceeds 5 CR rupees during any quarter in the current financial year, the registered person shall not be eligible for the scheme for the next quarter. So what is the time limit to opt for the QRMP scheme? This facility is available online. You can go to your GST portal and opt for the scheme and can be available throughout the year. So for the one, that is, there is an option for the one quarter. I can keep myself in old scheme. I can, for the next quarter, I can again switch in into the QRMP. Again, the next quarter, I can switch out from the QRMP scheme and come into.
Hello, Kunal, are you there? Hello, Kunal, can you hear me? Hello, Kunal. Members, I'm just calling Kunal, so just give me a couple of minutes while he logs in back. Please bear for 2 minutes.
Is trying network problem.
Yeah, Kunal, are you there?
Am I audible?
Yeah, we can hear you now. You were off network for I think a minute or so.
Okay.
You want to just share your screen once again?
Just better. I'll share my screen.
Yeah.
Is it okay?
Yes, I can. We can see you. Perfect.
See the time limit for opting this QRMP scheme. The facility is available online. This facility can be available throughout the year for any quarter. The option for QRMP once exercise will continue to till registered person revise the option or his annual turnover exceeds 5 CR. That was the minimum turnover. So for quarter April to June, you can opt for the QRMP scheme from 1st February of the last quarter to 30th April of the quarter in which you want to opt for the QRMP scheme. Then for July to September, timeline is 1st May to 31st July, October to December, 1st August to 31st October, and for January to March, 1st November to 31st January. Now the default migration by the GST portal. The department of the GST portal has automatically transferred or migrated the registered person to the QRMP scheme based on the turnover for the January to March 2000 for the January 2020 to March 2020, and they are migrated to the QRMP scheme for the dealer who has filed the October 2020 return by 30th November 2020. So they are directly or automatically shifted those registered taxable person whose turnover was below the 5 CR. The taxpayer who have not filed their return for the October 2020 on or before that 30th November 2020 will not get migrated to the new scheme automatically. They will have to opt by suo motu for the scheme by going to the GSN portal and opt by themselves. The taxpayer who wish to change the default option, so those who have automatically or by default opted for the GSN portal can suo motu or by their own can change their option from QRMP to normal scheme. So the dealer who has migrated by default by the GSN portal are up to 1.5 crore rupees. The registered taxable person whose aggregate turnover was up to 1.5 crore and was furnishing GSTR 1 on monthly basis. In the current financial year, the default option is monthly return only. The registered taxable person having aggregate turnover up to 5 crore and furnished from GSTR 1 on a quarterly basis in the current financial year, the default option is quarterly return. And the registered person having aggregate turnover more than 5 crore but up to 5 crore in the preceding financial year, they have defaulted them to quarterly return. So now by opting QRMP scheme, what will be the due date for GSTR 1 and GSTR 3B and what will be the procedure for the payment? So for filing of the GSTR 3B, due date is that old one only, 22nd and 24th of the next month. By filing the GSTR 3B, while filing the GSTR 3B, you have to make the payment by taking into account the outward tax liability, the input tax credit, and whatever ITC available with you for that quarter, and you will have to make the payment only after adjusting your payment made for the first 2 months of that quarter. Then filing of GSTR 1 is on quarterly basis. The due date is 13th of the next month after the end of that quarter. And for the payment, there is a special procedure. For payment, due date is the 25th of the next month by depositing the liability in the electronic cash ledger. Again, while making the payment under this QRMP scheme, the taxpayer has to select the option that is monthly payment for quarterly taxpayer as a reason for generating challan. So those taxpayer who is opting for the QRMP and paying tax under this scheme has to select this option, monthly payment for the quarterly taxpayer. Now for making the payment, there are two options available with the dealer. One is the fixed sum method and the second one is the self-assessment tax method. So what is a fixed sum method? This is the generated, this generate pre-filled challan in the form GST PMT 06, that is payment challan, which is equivalent to 35% of the tax paid in the cash in the preceding quarter where the return was furnished quarterly. So if the dealer is paying quarterly return for the October to December 2020, so he has to, and he is opted for the QRMP scheme. So for January and February month, he has to make the payment 35% of the payment made in the last quarter, that is October to December 2020. And if the dealer was filing monthly return up to December 2020, the tax equivalent to the tax paid for the last immediately preceding quarter. So for the dealer opting for the QRMP scheme and was on monthly basis up to December 2020, has to pay the tax equivalent to the tax payment made for the December 2020. So monthly tax payment through this method would not be available to those registered persons who have not furnished the return for a complete tax period. So the dealer who has only filed the complete tax period return can make the monthly payment under this scheme. So what is the complete tax period? A complete tax period means a tax period in which the person is registered from the first day of the tax period till the last day of the tax period. So if the person is taking registration on the 13th of December 2020, so he is not registered for the last full quarter, that is from 1st October to 31st December. So he is not eligible for this type of payment scheme. This is the example. Suppose in the case of the last return filed on a quarterly basis, that is quarter ending December 2020, that is October to December 2020. Suppose taxes paid in cash for CGST, SGST, IGST, CG and cess was 100, 100, 550, And under QRMP scheme, the registered person wants to pay on a fixed basis. So he'll have to make the payment for the January and February separately. That CGST 35% of 100, that is 35 rupees. Then SGST 35, IGST 175, and says 17.5. He will make payment this like this 35, 35, 175, and 17.5 for the January and also for the February 2021. Suppose the registered person was under monthly scheme or was filing the return on monthly basis. Say in the case of last return was monthly for the tax period to December 2020, he has paid CGST 50, SGST 50, and IGST 50. So under QRMP scheme, he has to pay or he has to make the payment for January and February, the amount of tax equivalent to the tax paid for the December 2020. So for the January and February 2020, he will pay 50 for CGST, 50 for SGST, and 80 for IGST. The second method was self-assessment. So first was the fixed percentage given by the department of the GSN portal. The dealer can opt for the self-assessment method also. So he can calculate his own tax liability by considering his outward tax supply, taxable supply, then by deducting his eligible ITC, and will make the payment as per their self-assessment basis. So in order to facilitate ascertainment of the ITC available for the month, an auto-drafted input tax credit statement has been made available in Form GSR 2B for every month. So if the dealer wants to pay on self-assessment basis, and whatever ITC he is eligible will get auto-populated from the GSR 2B for every month. Again, the registered person is free to avail either of the two tax payment method above in any of the 2 months of the quarter. Further, no deposit is required for the month if the balance in the electronic cash ledger or electronic credit ledger is adequate for the tax due for the first month or the first and the second month both, or where the tax liability is nil. Meaning that if I want to make the payment for the first month, that is January 2001, 35%, that is 35 rupees, and my cash balance of the credit ledger, electronic credit ledger having sufficient balance of rupees 35 or more than 35, so I need not to pay that 35 rupees again separately. Further, if I am going in the month of February 2021 and again I want to pay that 35 rupees, so my electronic cash ledger and credit ledger balance should be more than 35 plus 35, at least at 70 rupees or more than 70 rupees. So if my cash ledger and the electronic credit ledger balance is more than that 35% limit, so I'll not to make separate payment for that QRMP scheme for the first 2 months. Further, the deposit cannot be utilized for any other purpose. Once you have made the payment for this QRMP scheme, the said challan or the said amount cannot be utilized for any other purpose. So if you have made by mistakenly, you have made the excess payment for the first month or the second month, that excess payment can be asked for the refund only after adjusting your quarterly liability. Means any claim for the refund in respect of amount deposited for the first and the second month of the quarter for payment of tax shall be permitted only after the return for the GST 3B for the said quarter has been furnished. The tax deposit, this deposit cannot be used for the taxpayer for any purpose other than filing of the quarterly return. Again, filing quarterly GST 3B by making actual calculation of that quarter and adjust the said deposit against the liability. Any excess amount can be claimed as a refund or may be used for other purpose in subsequent quarters. So if I paid 150 rupees for the January and February 2020, and while calculating my quarterly liability for January, February, March, my liability is, say for example, 120 rupees. So 120 by total payment of 150 is excess by 30 rupees that I can claim as a refund, or I can use that 30 rupees for the next quarter or for other purpose of the taxation. In case of cancellation of registration of such person during any of the first 2 months of the quarter, he is still required to furnish the return in Form GST 3B for the relevant tax period. Suppose the dealer has cancelled his GST number or he has cancelled his registration, still he has to file that quarterly return for the quarter in which he has get cancelled his number cancelled. Then applicability of interest, how the interest will charge by the GST portal or act. In case of opting for the fixed sum method, no interest even if the deposit for the first 2 months of the quarter falls short to the actual calculation for the quarter if the balance amount paid within due date. Suppose the due date for the payment of tax is 25th of the next month. For the January 2021, I'll have to make the payment of 35%. If I make the 35% on or before the 25th of next month, that is 25th of Feb, and for Feb 25th of March, there is no interest. While filing GST 3B, water calculation for GST 3B is there, I'll have to make the payment of the balance payment before the due date of filing just that GST 3B, that is 25th of the next month. Suppose I am filing my GST 3B late, that is after due date, 18% interest under section 50 of the CGST Act will be applicable, and that is from the due date of the GST PMT 06 till the date I am filing or making such payment. In case Form GST 3B for the quarter is furnished beyond the due date, interest would be payable as per provision section 50 for the tax liability after netting out of your ITC. So whatever payment I will make for while filing the GST 3B, and I'm filing GST 3B after due date, the interest liability will be from the due date of the GST 3B till the date I'm making the payment for that GST 3B. In case of opting for the self-assessment tax, the interest will be payable as per the provision of section 50 of the CGST Act for the tax or any part thereof which remains unpaid or paid beyond the due date after the first 2 months of the quarter. And whatever interest is payable, it is payable through GST 3B only. Late fees. See, as per the scheme, the requirement to furnish the return under the proviso to subsection 1, that is GST 3B, is quarterly. So accordingly, late fees would be applicable for the delay in furnishing the said quarterly return or outward supply, that is GST 1 return. So if I am filing my GST 3B or GST 1 late, that is after due date, the late fees will be rupees 50 per day, that is 25 CGST and 25 rupees for SGST, and subject to the maximum of rupees 5,000 per return. However, it is clarified by circular number 143 that no late fees is payable for the delay in payment for tax in the first 2 months of the quarter. If I am making any delay in making the payment of tax for the first 2 months of the quarter, there is no late fees. The applicability of it is only interest portion. Further, there is the one facility available with the registered taxable person, that is invoice furnishing facility. Now with the new scheme, the dealer is going to file his GST 1 on quarterly basis. So whatever outward taxable supply details or outward supplies details, he will furnish only after end of the quarter, before 13th of the next month. But during that period, the recipient, the taxpayer's recipient or the buyer is suppose filing on a monthly basis, though, so they will not get their credit to be reflected in their GST 2B. So the portal or government has come with the facility of invoice furnishing facility. So before filing GSTR 1, you can file a statement in which you will provide the details of your B2B transactions, so that whatever details or transactions you will upload with the invoice furnishing facility, that transactions of the recipient will get auto-populated in their GST 2B, and they can avail the ITC by saying that 2B while filing their GST 3B for that month. Whether details reported in IFF will be reported in GSTR 1 again, Suppose I have filed IFF statement for the month of January 2021 and also for the February 2021. And while filing GST1 for that quarter, that is January to March 2001, whether I have to file again all the details which I have already uploaded in the by using the IFF facility. So no, invoice furnished through the IFF shall not be required to be furnished again in GST1. This means that the recipient will get ITC as per in their GST 2 or 2B from the IFF only as well as from the GST1. Whether IFF is mandatory or optional, whether invoice furnishing facility is mandatory or optional. The above facility is optional only. One can file or one can upload all the details in GST1 only while filing their quarterly GST1. The option is the above facility is optional and can be available to upload the invoice of the customer on a monthly basis if insisted by the supplier for the first 2 months. If the facility is not available, then B2B details can be reported on quarterly basis while filing GST1. So up till now, I have explained QRMP scheme. Now I'll move on to the e-invoicing. That is the new scheme or new style of issuing the invoice or raising the invoice. So what is the reason for bringing this invoice? So simply doing digitalization, ease of doing, then it will reduce the cost up to 96%, or you can say it will reduce the cost, it will save the time, it will increase the time efficiency, or it will increase the efficiency of work. Again, better compliance for the taxpayer and the simplifies the audit procedure. Interoperability between the software that eliminates need for the data entry. So once I'm preparing the bills and then again I'm uploading the bills to GSTR1 portal for GSTR1 or GSTN portal. So this e-invoicing facility automatically uploaded all the GSTR1 or all the taxable supplies details or my invoice details directly to eBay bill portal, again to my GSTR1 return. So there is a elimination of the data, duplication of data entry. Now who is required to issue e-invoices? Notification number 61 of 2020, which makes taxpayer with the aggregate turnover in any preceding financial year from 2017-18 onwards, makes this taxpayer whose aggregate turnover was more than 500 crores. The e-invoice for this category was compulsory from the 1st October 2020. So the taxpayer whose aggregate turnover during the financial year, during the preceding financial year from 2017-18 above 500 CR was compulsorily has to issue e-invoice from the GSTN portal. Then again, while notification number 88 of 2020, they have made a registered taxable person whose aggregate turnover during the preceding financial year was exceeding ₹100 crore from the 1st January 2021. So again, second category, from the 1st January 2021, all the taxpayer, registered taxable person whose aggregate turnover was above 100 crores are compulsory has to issue e-invoice to their recipient. So what are the relevant notification for this? Notification number 68 of 2019, which amended Rule 48, that is manner of issuing invoice. They have made amendment in Rule Sub-Rule 4, Sub-Rule 5 and Sub-Rule 6. So Rule 48, Sub-Rule 4 was form GST invoice 1 after obtaining IRN, that is invoice reference number. So e-invoicing, there is a one unique code will get generated that is called IRN, that is invoice reference number. Then again invoice other than e-invoice to whom the registered taxable person to whom the e-invoice invoicing is compulsory, the invoice issued other than e-invoice is not a valid invoice. Then again, due to e-invoice, multiple copies of the invoice, that is for the transporter, for the buyer, for the recipient, is not compulsory. So multiple copies of the invoice is not required now. Again, notification number 69 2019 notifies the common portal for issuing the e-invoices. There are 10 common portals for issuing the e-invoices. for example, www.einvoice1.gst.1 till einvoice10.gst.gov.in. Then again, notification number 60 of 2020, which specifies the format or schema for issue of e-invoice, that is INV01, the whatever format or whatever schema for by using that the dealer or the registered taxable person can issue e-invoice was specified in notification number 60. The following category are exempted from the e-invoice. The first one is special economic zone, that is the SEZ unit, is exempted from the e-invoicing. Then again, the person covered under CGST rule 54 sub-rule 2, 3, 4 and 4 are also exempted from the e-invoicing, and they are insurer, banking company and the non or financial institution including NBFC. Then again, goods transport agency, they are not to them they are not compulsory to issue e-invoice. Then again, passenger transport service. Then last one is admission to the exhibition of the cinematograph films in multiplex screen, that is multiplex. They are not made compulsory to issue e-invoice. Then this e-invoice facility is for the B2B transaction. Then what about B2C transactions? So what about B2C transactions by the taxpayer with the turnover above 500 CR? So notification number 72 of 2019 says that e-invoice is not necessary, but your invoice should have QR code, that is quick response code. And again, there is a one notification 89 of 2020 which waived the penalty of under section 125 for non-compliance of QR code between 1st December to 31st March 2021. So meaning thereby from the 1st April 2021, QR code should be there on the B2C invoice. QR code is compulsory from 1st April 2001 on the B2C invoices. Invoice reference number, that is the IRN, what I have just referred in earlier slide. So this is a 64-digit alphanumeric uniquely identified code or number which will get for once you prepare your e-invoice, which combines taxpayer GST number, financial year, document type and the invoice number. This is a 64 alpha numeric digit. We can't understand this number, so GST portal will handle very well. E-way bill system, how will work in the e-invoice system? So e-way bill provision is governed by the rule 130 of the CGST rules. E-way bill can be generated simultaneously along with the IRN. While generating your e-invoice with the IRN, e-way bill can be generated simultaneously with that e-invoice. Again, e-way bill can be generated later as well. Suppose if you don't want to prepare e-way bill immediately with the invoice e-invoice, you can prepare e-way bill after the e-invoice has been issued or prepared. Again, IRP supports e-way bill only for the invoices. E-way bill can be prepared through the IRP only for the invoices, not for the debit note, credit note, and other documents. If needed, cancel e-way bill first and then cancel invoice. If you want to cancel the invoice, first cancel the e-way bill and then cancel the invoice. And these are the FAQs for the e-invoice. Only 4 FAQs I have covered. That is, until what time I can register as for an e-invoice. So answer is, you can anytime before issuing invoice can register for the e-invoice. The second one is, can e-invoice be cancelled? Once I have prepared the e-invoice, can I cancel? Yes, e-invoice can be cancelled within a 24 hours of the creation. Can e-invoice be modified? The answer is no, you cannot modify the e-invoice once created. What if I have the e-invoice but I have not cancelled within a 24 hours? What will be the consequences? Cancel in your books, cancel that e-invoice from your books of accounts and do not report the invoice in your GST and returns. So that is the simple method to avoid this e-invoice. Thank you very much. I have covered QRMP and a few little bits provisions of e-invoice. I hope I'm audible because my network is getting fluctuating by minute. So I didn't understand uh, what has happened with me or what is happening with this network. With this, I thank Andheri West Study Circle for giving me opportunity to share my view on the QRMP and e-invoice. Thank you.
Thank you,
You're audible.
Kunal. We appreciate that. Before we do the vote of thanks for both the speakers today, I'll open the forum to raise any questions the members may have. So members can unmute themselves one by one and ask the questions.
Hello. Yeah, this is Ashok Mangnani.
Yes, Ashok, bhai, please go ahead.
Uh, we had some casual registration application done in 1718. And unfortunately, there was some requirement by authorities which could not be fulfilled. This is in case of casual registration, suppose I am taking casual registration. You can hear me, na? Are you hearing me?
Yes, yes, yes.
Yes, Ashok, bhai, we can hear you.
1718 का बात है, initial years of the GST regime. We applied for casual registration, say in MP. Now there was some the address issue will be there in casual registration. We didn't have the there was an urgency in the transactions, and we couldn't comply with the MP address requirement early. So, but the transaction went through. Sale purchase transaction went through in MP, and but the registration was rejected. Now issue is ki, and the ITC involved is in lakhs, say 10 lakhs, about 10 lakhs, and it is in my few of the states because the company is Pan India. Now till now this scenario is open. Like till now we don't have that proper registration is not regularized, or we in some cases we have made appeal. Like MP we have made appeal for regularization of registration. But Bihar, we have not yet been able to apply for appeal also. Make a appeal also. Bihar also we have transaction where ITs, some 6-7 lakhs ITs is involved. Obviously, if I don't regularize my casual registration, my ITC will be not be allowed. Now, today, as of now also, can I go to Bihar and make an appeal and regularize casual registration in the for the year? And incidentally, later on, since we were finding it difficult, we later on we took the permanent registration in the same state. Like MP, we had casual registration, we couldn't get through that. Then we later period we have taken the regular registration, and those returns are going. But then the transaction we incurred during the casual registration period are still lying open. Like we have collected taxes and we have input credit lying, like input credit is can't be availed because we don't have registration at all. So what could be solutions? Like say MP, I have made an appeal for against the cancellation, rejection of registration cancellation, and but we are yet not do anything in Bihar. We have not couldn't restore registration or nor could apply till make an appeal till now. Yes, sir.
अशोक जी, जो आपने अभी बताया वो सुनने को 5 मिनट लगे मेरे को.
Yes, sir.
So will you be please able to write it down and send an email to me, because it seems that it is regarding cancellation.
Yes.
It is done long back.
Yes, yes, yes. It is 1718 first period of GST.
So unless until I come to know about the details, that is, what were the notices served to you, how you replied and all that, I will not be able to, because whatever you said is date-wise, and unless until I get a full chain of it,
Yes, sir.
It will not be possible for me to comment upon it.
Yes, sir. Got it. Thank you,
Okay.
sir. Thank you, sir.
Hello. Hello, Deva.
Bolo Ajit bhai.
My question is to Phadke, sir. Sir, we take an example. Suppose I have sold the goods in financial year 1920 and there is a goods return in December 20. So if I give a credit note to my customer in December 20, will it be allowed as per the changes in the section 16.4?
Credit note can be issued in December.
Yeah,
Means
naturally.
if you issue it validly, okay, then credit will be available in December.
Yeah, but that time limit up to September, now it is not important.
That time
Okay.
limit is removed now.
Okay. Okay.
But that credit note or debit note should be valid
Yeah.
according to the time limit.
Because sometimes customer do take time in rejecting the goods for whatever reason.
Generally, when there is a
It's
question
a practical problem, sir.
Right, that's what I'm telling you. Whenever your business is like this, that it requires customers' confirmation.
Yeah.
Like let us say jewelry or some garments, etc. It will be always better if you do it on sale or return basis.
No, it's not garment business, sir. Suppose any other business where customers rejects the goods after 6 months, then we are at problem.
No, that's what I said. Instead of giving him the sale bill in the beginning, send the material on the basis of sale or return. By that.
So in regular course, I can take this benefit?
Yes, yes, yes. Because your nature of business is like that.
No, sir. Forget about, sir, the garment or any other sale or return basis. Suppose in normal business course, if these things happens, then what would remedy for us?
Can you come again?
So suppose in normal business, if this kind of transaction happens, customer rejects the goods after 6 months. So by giving credit note in December,
Generally,
I can
in
take a
such
benefit.
cases, what is the planning is, the person to whom you have sold, if he is registered, he can make a sale bill to you.
Okay.
So there will not be any problem.
Okay, sir.
So you get the credit and he pays the output tax.
Okay, sir. Correct.
So just on the similar note, Yani, so one of our client had a similar issue where the customer rejected the goods, but at the same point of time, he did not want to show it as a sales in his accounts. So what the customer did was, when the party had, did the transaction, let's say in financial year 1920, my client paid the GST in GSTR 3B, and in the same, it was reported in GSTR 1. But the other party did not claim ITC, and then later on, in financial year 2021, they rejected the goods. So so we were so what the question with Ajit Bhai had asked, the similar question, whether we can raise credit note in the financial year 2021 for a transaction which was done a year back. So now that that condition has gone away, it should be possible for the taxpayer to raise a credit note in the current date, right? So
Yes,
that should be possible.
That is not a problem.
Okay, understood. Any other members have any questions? Please feel free to unmute yourself and ask. So there's a question in the group, in the chat window. I'll just read out. Where I'm providing supply of service and supply of goods both, which composition scheme I can opt for, whether under section 10 or under the new notification?
See, basically, the person, what is your main business, whether it is service or whether it is goods. That is the main question. If you are doing service, certain goods supply is allowed. If you are doing the dealing in goods, certain services are allowed. Up to 10% permission is permitted. So that is not a question. So now it is converted from this particular date. It is converted as goods and including services. So now there will not be any problem. Previously, you have to find out whether your main supply is goods, then 10% you can supply the services. Like for example, if I am selling ACs, that installation is a service. So that is permitted.
Okay. So, but what would happen, let's say, if there's a works contract situation where, let's say, the contractor is giving material as well as giving the construction service?
That
Even in
totally
that
depends
case,
upon the contract. If you don't draft the contract correctly, what will happen? The contractee will be presumed to have supplied the goods to the contractor, and contractor will have to make the total bill. So while drafting the agreement, especially in the case of societies, be careful, because they call for the tender including material.
Including material.
And afterwards, just to reduce the ITC burden, they say that material is supplied by society. That should not be done.
Okay.
Hello.
No, and if it's a single contract, let's say a person is appointing a contractor for, let's say constructing a bungalow.
Bungalow is exempt. If it is a single bungalow, the works contract, there is no tax.
Okay. Understand. And if it's a scheme, then can you opt for an composition?
Service, what is the value is the question.
Okay. If it's...
Now, for example, if I am giving premises on rent, let us take a simple example. Right? The opposite party, let us say I am giving it to my franchisee. They are not getting the credit because they have to charge 5% on the output. So in that case, there can be an agreement that I go for composition, I charge them 6%, and they don't get the credit. As it is, they are not getting the credit. So the tax can be reduced in that case. So that planning can be done. That is not a problem.
Okay. The question which I had in my mind was, let's say the person is giving a composite contract for, let's say, 35 lakhs, saying that, you construct a, bungalow, 2 bungalows on a particular plot of land. Then whether that contractor can opt for a composition scheme.
Yes, up to, if it is up to 40.
Up to 40 it is out. Yeah. More.
That is not a big problem. But if it is more than that, he can't.
Okay. No, composition limit is 1.5 crores, no, sir?
No. For services, it is less.
Services, it is okay. Yeah. Services, it is less. Okay, sorry. Yeah. So that's okay. Understood. So work contract tax, one would be under the services and not under the goods.
Yes, work contract is a service.
Service. Understood, sir. Yeah.
Can I ask one question?
Sure.
Sir, nowadays GST department is rejecting refund application by saying that BRC, bank relation certificate, is not sufficient. Only FIRC is required, and that too as per the specified format. So this is applicable for both goods and services or only for services?
Generally, this question will come in the case of services only.
So BRC is not valid?
BRC, they may insist on other documents.
Now, in one of my clients, they have rejected, citing this answer that BRC is not sufficient document, you have to procure
He must
FIRC.
have asked you for some other evidence before that.
That we can give other evidence, but they are insisting on FIRC, sir.
Okay,
And some
but
bank
whether it
doesn't
was
give
asked
FIRC.
beforehand. He, instead of BRC, submit so much, so and so. They must have given you opportunity.
Sir, please repeat.
They must have given you opportunity to give other documents than
Yes,
BRC.
they have given opportunity, but they are still insisting on FIRC.
So have you submitted it?
Yes, FIRC we have requested to the bank, but bank is not cooperating.
No. Then you can reapply again because their time is only 7 days now. Previously it was 3 days only.
Hmm.
So you have to reapply after getting that.
Achha. Okay, sir.
And you can upload that along with the application.
Okay. Okay, sir. Thank you.
Okay.
Okay. Thank you, sir.
Jayang, any other things?
I'll just wait for a minute, sir. If not, then we can wind up the session.
Sure. So thank very much for everything. And anytime you can invite us for the discussions.
No, definitely, sir.
And
in fact,
if anybody has got any other problem, they can email it to me or Kunal on the email addresses which we have displayed. But again, phadke1952@gmail.com.
yeah.
Okay.
I'll take this an opportunity to thank you and Kunal. Thank you so much for accepting our invitation and doing this session for the members of Andheri West Study Circle.
It is our pleasure.
Yeah. Special thanks, Dilip sir, for answering the questions which were even outside the domain of the recent updates. You were kind enough to take all those questions and answer and address that.
So in case of Ashok Meghnani ji,
Haji.
the problem was his question contained many details. Unless
That's not an
until we
issue.
know that.
Yeah, I will share your email address with the
Yes, sir,
members.
I will get in touch with you, sir. Thank you.
Sure.
Yeah. So, on behalf of all the members, I'd like to give a big round of applause to you and Kunal.
Sure.
And, thank you again, for doing this session for our members.
Sure. Welcome anytime.
Yeah. So with this, we end today's session, members. The next session is on next Saturday, 6th February, and that will be on the Union Budget 2021 proposals. So with this, we sign
Who
off.
is going to speak?
Mr. Vimal Punamia is the speaker.
Then send me the link.
Sure, sir. I will send it to you. Yes.
Okay.
Okay. Thank you. Thank you, everyone.
Thank you.